Good morning, friends. Welcome back to my pre-market sit rep. So I'm doing this after a number of days, in fact, months. So I did until mid of August when I was struck with COVID, and then I could not race back fast, and there was a long gap. So this is the reason why, as a trader, uh, we should not break habits. Okay, so basically today I will discuss about habits for 5 minutes, and then we'll get into the pre-market sit rep. So we'll observe how to understand the market better. So basically, whenever we form habits, these should be good habits, and we should repeatedly make out these good habits work so that our life goes without any hiccups. So basically, we should get out of bad habits. It's very tough. It's not easy. Bad habits do not break so fast. That's why trading is very tough. So the biggest problem in trading is not learning new things. Okay, you can learn new things. You don't have to learn everything, but you can learn one thing and master it. That is not the problem. But the real problem in trading is your habits won't die hard easily. That means your bad habits will not go off. And the another side of the coin is that our good habits will not continue. So for example, if we follow certain thing for a month, there is no guarantee that it will continue for the next 2 months or 3 months or a year. So there are two sides. These are two sides of the same coin. We cannot get out of the bad habits, and we cannot make good habits work continuously. However, this is my second attempt at continuing these market videos, because these are like personal journals for me, and they keep me grounded in my own trading. So I want to make these videos pretty useful for whoever is watching. So with that in mind, I'll do my best to continue these videos for the next many months. Let's see how it goes. And over time, I want to add a Hindi version also, because many people will not be able to grasp just in English. But for people, most people from South India, probably Hindi might be tough, but not in these Netflix days. So let's see how it goes. I'll add Hindi as well as Telugu to my channel in the coming days. Okay, with that in mind, let's see what the market has done. We will just you should be knowing my format if you have been following me for long. We'll look at the longer time frame first, which is the daily time frame for an intraday trader or a scalper. And then we'll get into our intraday charts and see how the market is doing and what it is doing. Okay, let's look at Nifty first. So in Nifty, you can see that the market is, kind of trading at a very key resistance, and you see that there is a lot of congestion here happening. That is why we're not getting any trades. And also you see that it is traveling or traversing at a key resistance. And second resistance is not a small one. It is a very tough one. So to break this, we need a very large force, which is not there in the market, because the market is running on low momentum. You see that you go back to mid caps and small caps, and you see that they are not working. They are crashing actually. So another thing is there is no volatility here. We have a VIX around 15 here. We'll discuss. I'll make a video on VIX later for options traders. So with VIX at 15, we are not getting a big range. You see that we are traveling within 100 days, and it has 100 points. And you see that it has been 5 days, and we are traveling in very small ranges. So this kind of trading is good for scalpers, but for trend traders, it is very tough, very, very tough to find trades in this kind of market. So when has this started? This has started right from November, and in October it has been pretty good. So you see that the market has gone up very well by around kind of 1,000 points almost. So, but in November, you see that we are restricted to a range. So, and we have to respect that. We should not fight back. So, November is the time when most people, who are trend traders, might be struggling, though they might be getting intraday trades for around 100 points or 50 points. That is not sustainable. So, these are the times psychologically when you have to take a back seat. Don't struggle with the market. Don't fight with the market. So the thing you need to understand is you need another day to try survive in this market. You should not fight back with the market. It is not easy. It is, after 23 years, it is not easy for me. It's very tough. Every day will be tempting. We don't know when it will be a trending day and when it will be a rangy day. So that is the reason. That is that kind of darkness in our mind is the reason why we struggle in trading. Okay, so basically, whenever the market is like this, I keep telling my clients to back off, stay rest, don't take a revenge with the market, saying that, I am every day sitting in the market, so you have to give me some money. Market will not give. In fact, what it will do the opposite, and it will take back your money. So what is happening in Nifty? In Nifty, we are trading at a very severe resistance because before going to R3, the market may need to take a step back, form a lower low, and then go back. So we are not forming a lower low. We see that at frequent intervals, we are forming, on a larger time frame, the trend is up. So this is the level you have to be very careful of. That is 18,000. So around 18,000, you have to be very careful. The market should not come below this. So this is a kind of range that it is creating. This is a kind of range that it is creating. You see that we have a very tight range where between R1 and R2 that we are running. So the market can crash below this level or go back above this level. So we have already formed a higher low. So maybe we may form another low around this point and then go up or come down. So no one can forecast this. So if someone says that, I'm pretty damn sure that the market will come down, no, don't even give to such ideas, because you never know when the market will be going up or down. Accept that fact. So you have to go with uncertainty and you have to go with the flow of the market to trade. So that is for Nifty. Let's see what is happening in Bank Nifty, and then we'll get on to intraday trades. So overall, we are trading at a key resistance. So your position sizing in your investments, as well as in your positional trades or your intraday trades, should be pretty decent. It should not be very high. So don't size your positional trades to a level where you end up making large losses and losing capital. Okay, now let's look at Bank Nifty. Let's erase this one and then see what is happening in Bank Nifty. So in Bank Nifty, again, the situation is same. We are traveling near R1 and R2. So these are very severe levels. So these pivot levels, these floor pivot levels are very important, because you see how the market is respecting them. So yesterday also you see that we have failed there. That is why I was confident that call writers at 600 are pretty confident. If we had whenever we break this, we have to break this with a gutso. You see that how these resistances are broken. Okay, whenever these resistances are broken, it has to be through a gap or something. So we have to break this with a gap. So let me clear that. So whenever we are breaking these, so the market should kind of, come down and then open up with a gap. Otherwise, what happens is most of these resistances have huge order flow. So what is the reason for this? The reason for this is most of these flow pivots have good order flow. So, kind of, if you understand order flow, it will be very easy for you to watch for resistances there. That's why you become very convenient when you are watching order flow. So here also we are traveling near a resistance, so we have to come back to this level. So 752 on a daily time frame is very, very important. 41,752 and 42,600. So around 1,000 points of range we have created here. So to break this, it will take a lot of time. It's not that easy. So it has to be with a gap, and the next resistance that we see is only at 44,000. So the market needs to break this with gaps. You see that gaps are needed to break with next resistance, because there will be so much of strong force that big players would have created here. They would have created order flows that consume liquidity around these levels before going up. So these are the daily charts. So let's look at what intraday charts are doing. So let's look our intraday levels through market profile. So because I prefer market profile to understand the market structure better. Yesterday, let's see what the behavior was. At open in my channel, I told you that we need to break this particular zone. This is a virgin point of control as of yesterday, as of yesterday's open. So we opened below this level. We opened around kind of around these levels, around the value area high of the previous day of 15th November. We went down, and then immediately we kind of shooted back, but there was a lot of congestion around this level. You see that the market could not go past these levels so easily. So in the afternoon, because it was expiry, the market, kind of slowly tried to climb back. However, yesterday was very important. That's why the value area high came into force at around 480, 500 levels. And then, kind of we immediately collapsed for liquidity. And this is where we took 18,400 put, because spot was below for 18,400. So always in options trading, you need to understand what strike you need to take for better positioning, and that comes from spot, because though the expiry of options is based on futures, the spot level has a lot of importance in options trading. So you need to keep observing that also. So generally what happens is, if you would have taken 500, it would not be that a good multi-bagger. So that's why we went with 400, which kind of went up by 3 times. Our entry was at around 25. So it went to around 56. So almost 2x we made on that put option. So now what is the plan for today? So when you look at the daily chart and then look at kind of this this here, you see that we are trading in this big range. So this is called a balance in terms of market profile. So you see that kind of the market is going something like this, coming down, going up, coming down. So the market is basically trading rangy. It doesn't want to do anything. So if at all you need to trade this kind of market, you have to look for intraday levels, and that is where market profile and order flow are very, very powerful. And today, depending on SGX, if we have to come out of this balance, like this is an indication that shorts are trying to take over. However, what happens is, depending on what the US markets are doing, we may kind of break below this zone, and this is a key level. So VWAP of, sorry, not VWAP, forgive me, VPOC of virgin point of control of 18,275. These VPOC levels are very, very important in market profile. They hold a lot of power. So we don't have to, kind of see below levels below this, because VPOC is a kind of level where there can be good kind of support, as well as what I say, a reversal from there. So we have very good 2 VPOCs here. One is at 18,275 and the another one is at 18,000. So which is like 200 points each. And there is a pretty decent probability of these levels coming out in the future. However, if the market tries to kind of, break the resistance that we have just discussed on daily charts, we have to break 18,475. This is very, very important. So if we break this with a gap, then we can see 18,636. Remember the level 18,636. That is the level you have to look for. 18,636, 18,636. 436. Remember this, above 475. So that is the level that we have to break, and then only we can see some kind of traction in those levels. Let's look at Bank Nifty, how Bank Nifty has fared in terms of market profile. So this looks a bit odd. Let me change the settings. So I'll keep something like 150 so that I get a better view of how time behaved in terms of market profile. Let's see. Yeah, now let's see. So excuse me. So yesterday again the same process. We opened, we went up at instead of POC as in Nifty, we filled near 42,600. So I was pretty confident. 42,600 call writers are kind of protecting the market. However, one key thing in Bank Nifty is that Bank Nifty was fairly stronger than Nifty, because Nifty ended at the balance lows. But in case of Bank Nifty, we see that we are forming only a 2-day balance. So and we need to break this kind of zone. So basically, to understand the balancing behavior of Bank Nifty, see this. So there is a kind of traction on the upside. We are trading above the mid of this balance. So this is what we are doing. So what is the key level that we have to look for? So 40-300 is where we need to be very careful. So generally these are these VPOCs are magnets. So whenever the market comes down, will go below these are like magnets, and the market will attract them. So whenever there is a crash, this is what is going to happen. And another key thing yesterday that has given me key information for me is the maximum point of control, or I can say prominent point of control. You see that 40-362 is pretty decent and important level. So on either sides, and that is why we see that we have that level has demarcated yesterday's trading in a pretty balanced way. So today, what is the plan? We need to go above 650 towards 40-800 and even 44,000. But I'll be very careful because the RSI is diverging. There is no momentum, and we are trading at key resistances on daily chart. So I'll be very careful about 40-292. So break of 40-300 can bring 160 pretty easily. So these are the two levels I'll be very careful about before trading. So that is what it is today. Hope this edition of Market Profile and discussion has helped you a bit to understand these charts. So if you want to learn Market Profile, you can join my mentorship program or a training program on Market Profile and Orderflow. You can contact me on Telegram, or if you want trading views, my trade views, which I trade daily, you can contact me on Telegram, so that you can benefit from the kind of expertise I have in identifying intraday levels for trading. So that's it for today's edition of pre-market setup. Have a great day. Trade well. Today is Friday. Have lower position sizes. Don't be aggressive on Fridays because your weekends will be ruined. And there is always next week. And with weeks around 15, be very, very careful. Take a holiday. I'm not saying that avoid trading, but trade very, very small sizes so that you can be ready whenever a market like this comes. Because when you lose capital on trends like this, you will not be there in the market on trends like this. And that is the hallmark of a trader. You should understand when to trade, when not to trade, when to step out. If you have mastered that, you can be a trader for life. If you have not mastered, I'm not saying leave trading, but master that first. Okay, that's very, very important. And have a great day, and bye-bye. Take care, guys.